Question for you. What in the world is going on with interest rates? It is 12:10 Texas time on January 12th, and interest rates are sniffing 3.75. Whoa. I mean, if you consider where we were most of last year and the year before, 3% at one point, 2.875. I remember getting the phone calls when I locked a client at 3.25, and their question was, "Are you kidding me? Have rates gone up?" And I was like, "Are you kidding me? 3.25." But anyway, I wanted to share this chart with you. Shared it this morning with my office, just to kind of illustrate exactly what's gone on and what causes rates. Now I'm going to try my hardest to not mortgage nerd out on you. But I think it's incredibly important for you to know the why behind the what has happened, right? So if you'll look at this chart, you'll see the price of the mortgage bond or mortgage-backed security. This is 100% what dictates interest rate movement. When rates go up, it's because these prices move. When rates go down, it's because these mortgage bond or mortgage-backed security prices move. That's it. It's not the one-year Treasury. It's not the Federal Reserve. The feds don't set mortgage rates. They set a different rate. They influence long-term rates, but they don't set mortgage rates. So go all the way back to the beginning of August last year. We were right around 3% on the average interest rate. You can see, so each one of these they look like a candlestick. Each one of these candlesticks, some are red and some are green, they represent one business trading day. So it's like one day of the week, right? Monday through Friday, except for holidays. And you'll see it's just kind of from August to really honestly, all the way through the middle of November. It just kind of, it's a nice flowy kind of line, which is what we kind of hope for, right? And then all of a sudden you see towards the middle or end of November, just 2 months ago, you'll see that trend starts to drop. That's not good news. That means the price of mortgage bonds are dropping. And when price drops, yields, and more importantly, interest rates move up. They move in opposite directions. So I've notated on here, I've kind of earmarked the events that caused interest rates to move the way that they did. And if you look at the very far right of this chart here, you're going to see a lot of volatility, and you're going to see a lot of red candlesticks where price has just dropped and rates have shot up. So I actually quoted for the first time in I don't know how long, 3.75. So that's kind of where the market is. I know you're going to see all kinds of things on the internet. You're probably still seeing 2.875 offered by some joesmortgage.com place. It's not attainable unless you pay a hefty amount of points. But nonetheless, I wanted to share this with you. This is kind of where we are. This is why. It's really the Fed meeting towards the end of this month. January, I think 27 and 28th or 28 and 29th. That's going to kind of be a key on what happens with interest rates and also inflation. Feast your eyes on this, pause the screen, take a look at it, and just get a feel for where we are. If you have any questions, please give me a call. I'd love to help.